Hello everybody. In this video, we will be learning the basic structure of the Income Tax Act 1961. Previously, we learned a brief history of income tax in India. We learned the three major acts in India, the first being the Income Tax Act 1860, which was presented by the then finance member Sir James Wilson, then the Income Tax Act 1922, and lastly, the only Income Tax Act of independent India, the Income Tax Act 1961. Then we went on to learn the authority to tax in independent India. We learned that the Constitution of India in Article 265 gives the power to tax and states that no tax shall be levied or collected except by authority of law. The union government and state governments pass tax laws. Article 246 of the Constitution divides taxing power between the central government and the state government. Entry 82 of the Union or Central List grants exclusive power to levy income tax to the central government. This is other than agricultural income. Entry 46 of the State List grants exclusive power to the states to levy tax on agricultural income. We then learned the five components that lay down the income tax law in India. The first being the Income Tax Act 1961. The second being Annual Finance Acts. The third being Income Tax Rules 1962. The fourth being Circulars and Notifications. The fifth being Legal Decisions of Courts. In this video, we will be learning the basic structure of the Income Tax Act 1961. The Income Tax Act 1961 is a law that is passed through Parliament by the central government. So what is a law? A law is an official document passed by the Parliament that states what a person may or may not do. A law is in the form of a book. The Income Tax Act 1961 is a law that lays down income on which a person has to pay tax or does not have to pay tax, and provides at what rates a person has to pay tax. For example, the income of a person is rupees 100. The Income Tax Act lays down that this person has to pay tax on all of the 100 rupees and has to pay tax at the rate or percentage of 30%. Therefore, multiplying the income 100 by 30%, that is the rate of tax, gives us the tax amount, that is rupees 30. Therefore, the income on which tax is to be paid multiplied by the rate of tax is equal to the amount of tax. We will be learning more about the incomes on which tax is to be paid and on which tax is not to be paid, and the various rates of income tax in India in subsequent videos. This is a simple way of representing and understanding how income tax is computed. Now, this is representative of the Income Tax Act 1961, that is in the form of a book. The easiest way to understand or go through the contents of a book is to study the list of contents. Like in any book, the contents of the income tax are arranged. Like in any book, the Income Tax Act 1961 is divided into chapters. There are 23 chapters in the Income Tax Act. Further, the chapters are divided into sections. There are 298 sections in the Income Tax Act 1961. Then, there are 14 schedules in the Income Tax Act. Okay, so this is the broad outlay of the Income Tax Act 1961. It is divided into 23 chapters. The chapters are further divided into 298 sections, and there are also 14 schedules. Okay, so in this video, we learned that the law is an official document passed by the parliament that states what a person may or may not do. Laws are in the form of a book. In the context of income tax law, it is an official document or an act that is passed by parliament that states what income a person should pay tax on or what the person should not pay tax on. And it also prescribes the rate at which tax is to be paid. We looked into an example of a person earning rupees 100 as income and the rate of tax being 30%. Therefore, the tax amount equals to 30. That is, income on which tax is to be paid multiplied by the rate of tax equals to the amount of tax to be paid. Then we went through the broad arrangement of the Income Tax Act. As the easiest way of going through any book is to look at the list of contents. We observed that the Income Tax Act has 23 chapters, 298 sections, and 14 schedules. In the next video, we will learn further about the basic structure of the Income Tax Act 1961. We will learn why arrangement is important and how to refer to the Income Tax Act. I will see you in the next video.